friend, Institute of Chartered Accountants of India, with whom we have been working a lot with the Maldives. Of course, I have been given a topic of ESG learnings and lessons, and I was just going through the sessions which was taken initially by the speaker also from Sri Lanka, the professor. I believe he has covered quite a bit as far as learnings is concerned. So, of course, my presentation includes both. So, I'll try to skip those presentations so it should not sound repetition. I'll try to come on the learning scenario from an Indian perspective. As you all know, because India is a big country with 1.4 billion population, 400,000 plus members of Institute of Chartered Accountants of India, engaged in audit and assurance, now also engaged in providing assurance when it comes to reporting for sustainability, when we call it basically BRSR reporting, business responsibility and sustainability reporting. So the assurance has also been now provided by chartered accountants. Of course, it is not only predominantly a domain area, and it's neither a monopoly. It can be provided by other bodies also. But yes, chartered accountants are playing a very important role. It has to its merit of issuing first time 16 social standards, that is social audit standards, to measure, to certify assurances as far as compliances of social audit standards are concerned by the corporates. So quite a bit has been done on that. Institute has also come with a standard on assurance engagements as far as sustainability is concerned. Its own SSAE 1, SSAE 2, which we call. So we are doing a lot of work, but it has its own challenges when we see it from an Indian perspective. And coming to, obviously, I don't want to go into ESG learnings too in length, but let us take an experience and more a practical way of looking at it. Of course, ESG talks about three important principles: environment, social, governance. And when I talk of environment, it's very important for a country like in India, with a population of 1.4 billion, as I said earlier. And can it be done only by coming through a regulatory changes? Or it has to start from each and every individual citizen? That's what the question and the lessons have been taught. We generally propagate, if you see from the ministry's point of view also, there is a complete advertisement which has been done in the media. You will see, you please say no to plastics. So government recognizes that government can't alone do anything. The regulatory changes cannot do anything. It's individual citizens which can actually help in saving this motherland, saving the environment. So it's not up to what can be done, what presentation corporates can do. It doesn't really matter actually. And I was just discussing with my friend Mr. Tyagi over here, who is also coming from Mumbai. And we were saying, what could be my immediate lesson would be that you have to think with heart and not with your minds. When we talk about ESG, you may be talking about what is the business for a chartered accountant, what is the new business, new opportunities for the corporates, how the business should be done. But if you talk about individual citizens, our learnings, my learnings personally, and the learnings from Indian perspective has been you have to think from an heart. Let us take an example. Of course, it's a big country. There are villages, there are rural areas. I was just discussing outside. In India, most of the corporates, if anybody has heard of, there's a state called Rajasthan, which is a barren. And there used to be rains are also quite not very frequent over there. It's like a barren, like any Middle East, there are no rains. So the state government came with a scheme that why do not corporates adopt a particular village? So what do you mean by adoption of a village? Let us take an example. If I adopt a village which has a population of 5,000, 10,000, scarcity of water, can a particular corporate, maybe under a CSR as the corporate social responsibility, maybe as an environment sustainability project, why don't you adopt that? So when I say of adoption, you just plant the trees in that particular village, which may run from length and breadth of around 2 kilometers or 3 kilometers or maybe 4 kilometers. I have, in India, you have more than 5,000 listed entities, maybe many more, 300,000 private limited companies which are functional, which are doing active business. If they are able to adopt 5 kilometers or 10 kilometers of particular streets, if they can put actually a trees which can actually change the environment over there, can change the climate, can bring down the effects of the climate, that is the temperatures going up, it can bring, it has been done. I can give you an actual example what I am trying to tell you. In Rajasthan, where those villages were being adopted by the corporates, stating that I'll adopt this particular village, I will plant a neem tree, it's called a neem, which actually helps in getting a better temperature, rains are better there, and if you see the experience and compare what was there 5 years before and what is there today, practically those villages have come out of the scarcity of water. The temperatures have gone down over there. Even though there is a global climate change happening over there, there's a global warming, but if you see those areas, there is actually change which has happened. And that's where the lessons come, and they really, only by doing individually by each citizen, realizing the importance of the environment, can it change? I think so, that's the answer. That's what the learning which India comes from. Obviously, there are a lot of regulatory things which are already there. The regulatory perspective is from controlling the corporates, that they should not greenwash, they should have a least amount of possible ways of not generating emissions as far as possible. But whether that will really replace, because there are three aspects, obviously, reduce your emissions. If you have reduced your emissions, if you are not possible beyond a particular point, you do some alternative, so you get a credits of that, or you buy credits, who is actually generating it. But really this would happen unless and until it is actually dealt into a, because we are talking of a world as a whole today. If I am talking of an India, which is a big country, then you are talking of a world as a whole. So when you are talking of a world as a whole, each individual is definitely responsible. I could see today over here, the bottles have been already replaced from plastic bottles to glass bottles. So that's the beginning which has happened. And when I talk about ESG, if you are not doing it today, then it's already late. We are already late. You see the temperature, I'm sure every country is facing. So we are already late. We are discussing now the reporting standards. We are discussing the costs associated with it and the benefits. I think so, no cost. There can be no discussion on that when it comes to protecting motherland. That's what our experience is. There may be a cost. Cost is in regard to reporting. That's okay. You may or may not report. Because even after reporting, there is a risk of greenwashing, which we have been discussing every day. But the question is really what is the impact which will actually be created is the most important learnings which we have done. Of course, India was party to the Paris Agreement, where 196 countries have signed it. And they have agreed that they will let not the temperature go up more than 2 degrees Celsius or 1.5 degrees Celsius. And how to reduce greenhouse gas emissions, what manner the financial assistance will be provided. All countries are required to reduce their greenhouse gas emissions, and also developing countries are required to provide financial assistance to, developed countries to developing countries. Transparency and accountability, when our role is coming in, we the chartered accountants, we the professional service provider. So whatever emissions are happening, please do report it. Do not greenwash it. Do report as it is. Let this reporting be verified by third party. In India, 150 listed companies, top 150 with the market capitalization, is today already required to get it certified by the third party professionals. So whatever reporting is done in this regard, which I said BRSR, it has to be certified by the third party. 150 is for the financial year March 24. This will go up to 250 March 25, then 500 and 10,000. So all top 1,000 companies, they have a requirement of reporting even today, but they are not required to get it certified by a third party today. Because there are difficulties in this regard, and again, as we all professionals discuss, the cost outweighs the reporting assurance, and therefore it has been given a timeline of 4 years. But ultimately the idea behind is that whether really speaking 4 years we should wait for it. Coming from a perspective of Institute of Chartered Accountants of India, I will just take an example. Most of the members over here would be aware. We had organized World Congress of Accountants. We were given an opportunity by IFAC in 2022, and 7,000 physical members were there who attended this conference, apart from 4,000 online in Mumbai, city of the Mumbai, and obviously the carbon emissions would have been quite high. So at the Institute of Chartered Accountants of India, in our council meeting, we were just what we should do basically about it. Of course, we are organizing this program. It's an MAF program. Once in every 4 years it happens. India got an opportunity by IFAC once in the after 100 years. What should we do? But the carbon emissions is there. And this program, a lot of people would be traveling. There were 1900 foreign delegates. So much everybody would be traveling abroad. So what we should do? We decided at the council level itself that it should be a net zero program. If required, whatever makeup, we should do it an alternate arrangement available wherein we can say that my conference was the net zero. We had been successful, obviously. We had to appoint a consultant, one of the big four, who actually calculated, obviously, how accurate it would be. But yes, the calculation was done. We tried to also offset it by acquiring whatever carbon credits we could do it, by doing any alternate procedures like plantations of tree. And as a matter of fact, every year, the only institute, because institute is a regulatory body for the accountants, apart from other institutions which would be doing it, our institute this year has decided that at least we should plant 100,000 trees from a chartered accountant institute. Minimum 100,000 trees you could see on our website. So we are trying at each individual level as a regulatory body. We may be a small regulatory body for our professionals, but there are many other regulatory bodies for the corporates. We have a SEBI, for the banks there is the Reserve Bank of India. Everybody has been given a target by the government of India. Can you please do this? Whatever your programs are, should have in your. So you start with the regulatory bodies, number one. First, yes, government will do. Second, regulatory bodies will do. Then the third in line is corporates. From a corporate's perspective, it's more important that you reduce carbon emissions rather than buying credits or doing an alternate mechanism. So that's what idea has been. And what difficulty which has been faced, lessons which I could say up till now is, there is still no much seriousness which India is also facing is at the top level. It has to percolate from a top level. Top level has to be more serious about it when it comes to an environment, when it comes to a social, when it comes to governance for that matter. If there is a seriousness at the board level, at the management level, at the promoter level, obviously it will percolate. I'll just take an example of EV vehicles which have been launched worldwide. India is promoting that. There is a reduced tax rate for that purpose, which is again a worldwide objective which is there. But obviously a lot of corporates have started promoting their employees for the use of EV vehicles. So there is a compensation accordingly available to them, which promotes them, which helps them that yes, I will buy EV vehicles because the corporates are supporting that. If you are buying any other vehicle other than EV, that support is not available. So there's a push from the top. Whenever there is no push from top, obviously the results are not so good. It makes a difference. Apart from this, coming to ESG disclosures, which is a very specific topic, I believe. I've already mentioned there is a BRSR reporting compulsory, mandatory for certain class of companies. Assurance is compulsory. But how far we can rely upon those data? How far you can be ensured, the readers can be ensured that there is no greenwashing happening. Yes, we have talked about, my earlier speakers told that yes, investors are looking into it. Investors are now not more concerned with the profits. That's what has been told. But in reality, profit is obviously a motive even today. Three peoples, yes, people do talk about planet, people and profit. But how far the importance of the planet and people still remain with the investors is a important thing which obviously people are saying yes, investors do look into it because that's their future, it depends upon. But ultimately when the investment decisions are been happening, that's our experience. Profit has been a strong motive yet. Apart from people, then it may not be to that extent. People is obviously because you cannot make profit without people, it's impossible. It's different. So that calculation has to come from the investors as well as the promoters and the management, that irrespective what it is, for the when it comes to 3 P's, planet and people has to be above the profits. With this, of course, it has to run in my blood, obviously. I have to agree to it. If I talk about the governance, whether the corruptions will go down, yes. country is facing. Every country faces this issue at the top level, but at the bottom level, at individual small level, whether you can actually eliminate it. Yes, India has been successful to quite extent. That's what our experience has been. Because of digitization, corruption has gone down, governance has improved quite a bit. So the only way would be that once it goes out, because of digitization, people's minds will change. The new generations, which is the highest when it comes to India, highest working population which India is having today, if they have in mind that I will do my business with the government in a digital manner, with no corruption happening, the governance is there already. So these are the important things which I thought I will just try to cover up in my actual presentation. Obviously, I changed my language because I didn't want to go into the same thing ESG which my presentation was concerned. I thought I would try to make it more practical. But nevertheless, what does my presentation say? I'll just quickly move through it. So these were the key contents of my presentation. ESG and its components, global context, which we have been discussing in last 3 sessions. Evolution of sustainability reporting in India. I've already told you about it. ESG in India, learning and lessons, Indian context. Issues still live in our jurisdiction, key learnings and implementation process, future outlook. I'd like to go into last 3 important, I'll just slide it others. ESG we have covered. Obviously the components of ESG were from only Indian perspective. It was not a global perspective which was mentioned in this presentation. How evolution of sustainability reporting in India, just for briefly, it started as early as in 2009 when there was a voluntary guidelines were issued that the reporting by certain corporates should be done. In 2012 it was mandated for top 100 listed companies by market capitalization to file business responsibility report. In 2015 it was mandated for up to 500 listed companies. In 2017 BRR was replaced by integrated reporting which was more comprehensive. 2019, it was extended to 1,000 companies. 2021, another report, BRR was replaced, integrated reporting was replaced by BRSR. And 2023, a core BRSR core for the company and its value chain along with disclosure and assurance requirement has been introduced. BRSR, which we are talking about, the evolution, it came in 2021. Objective is to enhance transparency and compatibility of ESG data, making it easier for investors to access the sustainability reporting and risk related to it. Framework, mandatory compliance, as I said, for the 1,000 listed companies. Content, generally the content of BRSR is divided into 3 important sections, which is general disclosures, then there is a management and process disclosures, and principal. There are key performance indicators which have been identified for this. What are the key learnings from an Indian perspective, if I can tell? The leadership commitment, which I already said when I was discussing without my presentation, that the leadership commitment is the most important when I talk of leadership. Obviously the board members, it's a crucial for any successful ESG implementation. Integrating ESG into core business strategies ensures alignment with the long-term goals. Continuous monitoring and transparent reporting are the essential for measuring progress. What are the failures and challenges faced by the companies? Many companies struggle with collecting and analyzing ESG data that we have been discussing. So my professor from Lanka had also that whether the data which is coming in is reliable or not. That challenge, of course, India is also facing today. Regulatory compliance can be complex and burdensome. It has been found, but obviously it has been only implemented for 1,000 companies. But India believes that it should be extended to all the corporate entities who are engaged in manufacturing in the first phase. I'm sure it's very soon, within 3 or 4 years' time, this would come. Balancing short-term costs with the long-term ESG benefit. We have discussed, even today I was told in the morning when President was speaking that the cost sometimes outweighs the implementation strategy, and a lot of worldwide people are not able to implement that. That is an issue with an Indian scenario also remains, and therefore it has not been mandated for all sort of companies. Emerging trends, There is increased focus on climate risk disclosures driven by investor and regulatory demands. Growth of green finance. There are green finance, sustainable green bonds have come in. Even the municipalities, the state governments, and the city, local municipal corporations are issuing now green bonds. So obviously, and the advanced such as AI, blockchain are being leveraged to enhance ESG reporting. Artificial intelligence will help in time to come in making the reporting more easier, accepting the challenges which are associated with ESG, definitely. As far as assurance is concerned, we have a reasonable assurance. Obviously, it applies to 150 companies only from 23-24. But it is required for a reasonable assurance. Now, as you know, we know accountants, most of them, it's about limited assurance. So, still, address greenwashing. This is the most important. Whether the reporting done by the corporates is it actually resulting into a greenwashing or not. SEBI has already mandated ESG schemes to invest 65% of assets under management in listed entities where BRSR code is assured. So if there is a scheme floated by a funds which is called as ESG scheme, then the 65% of the amount has to be invested in those companies where assurance is mandatory. So that's a regulatory backend. Roadmap to net zero by 2070, that's what government is committed to. Recently, when there was a COP26 meeting, the government of India said that by 2070, they ideally wants to reach to net zero. Key learnings from an Indian perspective, implementation of assurance standards. As I said, already standard on sustainability assurance engagements has been issued by ICI to meet the SEBI requirements. Standards on assurance engagement SA 3410 on greenhouse gas statements was issued and the revision of same is in process. Then BRSR backtesting has been done by the Institute of Chartered Accountants of India. We also have come up with a sustainability reporting maturity model, SRMM. That version 2 by the ICI, it enables organization to assess where they are on the sustainability reporting maturity scale, formative, emerging, established, etc. So it's a maturity, it's a risk metric sort of. So if you just put a ranking, they know where do they stand. Basically, it helps the corporates in deciding where they are standing. Sustainability reporting awards, ICI is also giving awards to the corporates to promote that the reporting is at par. So the awards are being given. Social audit standards, we have already come with 16 of them. Certificate courses by ICI. Institute has come out with certificate courses which is in jointly with the National Institute of Securities Market on social impact assessors certificate examination. As of today, more than 640 members have already qualified in that examination. And they are now certified social impact assessors. Similarly, there is one course on SR, Sustainability and Business Responsibility and Sustainability Reporting, that is BRSR. And we have conducted 23 batches of them. 2,120 participants, mostly chartered accountants, have already qualified till that and they have enrolled. So with this, thank you very much. I would like to end my speech. Again, thanks the members of the Institute of Chartered Accountants of Maldives for giving me this opportunity. Thank you.